Hi, this is Kerry Artek with Wicked Stocks, bringing you an individual stock pick in Occidental Petroleum, symbol OXY. I did record this video, by the way, on Thursday, September 29th, 2022. We can scroll to the basic fundamentals, courtesy of Yahoo Finance, certainly in the large cap category. I'm sure you're familiar with Occidental Petroleum. I'm going to segue now into the weekly bar chart. Weekly charts throughout, same chart, but just opened up in different capacities. This is obviously a chart going back some 30 years, shows 30 years of data on Occidental, and we're going to zoom in this red square area to show you that presently testing channel bottom that this week is at 57.62, rising 23 cents a week. This formation can contain selling through October. And from here, there's plenty of precedent, as you can see, that over the next 1 to 2 months, both of the rallies up to the trend line on the top occurred from the same distance in the scope of the first instance was about 3 to 5 weeks. The second instance was about 2 full months. So by the end of November, we can actually rally up to the channel top that is presently at 78.07 and rising also at 23 cents a week. So this is the play. As if the market eases back into the upper 50s again, or even in this vicinity, I wouldn't have a problem accumulating a long position, whatever that means to you, whether that's buying the underlying stock itself or buying perhaps $80 calls, out of the money calls that don't expire for at least, I'd say, 3 months. You may go a little further out there just in the event it takes a while to get up there. But holding above 57.62, this stock is poised to rebound another wave up into the upper 70s over the next couple of months. By the end of November, I think is realistic. Obviously, the timing on that is impossible. So this is a decent, 30% move, roughly, maybe a little bit more than that from 57.62. So this is a good play, 30% move in the underlying itself over the next couple of months. Obviously, if you were to buy out of the money calls, at the money calls, whatever the case might be, I'll let you just determine that. But I think if you're doing the out of the money call, it would be a less expensive investment, obviously, and then you want to go at least 3 months out. If you only go a month or two out on an $80 out of the money call, once again, you can be correct on the move and watch the stock rally up to $80 roughly a share over the next couple of months and not see a whole lot in return for an option that might expire, say, at the end of October, for instance. So this is the play. This is the upside play. Base of support actually starts at 57.62. I'll also show you that there's a rising 1/3 speed line projected off that significant 2020 low at 8.52. That's the lowest the stock had been in many years. And so that comes in at 56.18. And it rises at 47 cents a week. And in fact, over the next 3 or 4 weeks, by the later part of October, it converges entirely with that channel bottom. So this is a nice range of support, a base of support, significant support, able to contain selling through October, quite possibly the balance of the year. Because from here, once again, over the next couple of months, we can push into the upper 70s, low 80s, that channel top. 77.12 was the actual high from August of 22, so we could just at least say a retest of that high in any event. So let's talk downside. That what if we close below not only 57.62, but the sell signal would be a settlement below 56.18. So keep that in mind. And by the way, if we close below 56.18, and once again, that rising 1/3 speed line, 47 cents a week, that is your sell signal if settled below. And if we settle below the rising 1/3 speed line at 56.18, we also satisfy the 1% violation of 57.62. So I think that would be a pretty solid go with to the downside. In other words, if you bought those $80 out of the money calls, for instance, or if you bought the stock itself in the upper 50s, you would want to liquidate that position, in my opinion, and in fact, reverse entirely. Reverse meaning perhaps into the low to mid 30s over the months ahead. In this situation, closing below 56.18, you would liquidate that 80 call or liquidate the stock itself and go short. Short could just mean buying a 35 strike out of the money puts that don't expire for at least I would say 6 months. I think the play itself could be inside of 3 to 5 months. So if we close below 56.18, I would say a 3 to 5 month move down into the low to mid 30s, the 32.38 rising 2/3 speed line. With speed line analysis, if you close below the rising 1/3 speed line, that is to say 56.18 on this chart, then your target becomes the rising 2/3 speed line, 32.38 in this chart, rising 24 cents a week. So closing below 56.18 at the end of this week, or that speed line rising 47 cents a week over the next few weeks, would set off a meaningful sell signal that should play out well into the first quarter of next year. 3 to 5 month signal down to 32.38, where profits can be taken, bottom picking can be pursued as we move on a quarter-by-quarter basis. That could be it through all of 23, by the way, that 32.38, if that becomes an objective by closing below 56.18. And also mentioned that on the way down, I think you've got a realistic 1 to 2 month target at 42.82, which is a 50% downside retracement on that October 2020 low against the more recent August high. But I wouldn't... I'm putting it out there really for near-term traders. You can get a nice 2 to 3 week bounce, 3 to 5 week bounce off of 42.82. But just know that closing below 56.18, we're set up for that 32.38 target. And I would say 3 to 5 months is realistic. And that would probably be about it then. On a quarter-by-quarter basis into 23, it actually may mark a good low through 23. I think I'll leave it at that. There's really not much else to say beyond what I have, and that's all I've got for this particular Wicked Stocks video analysis on Occidental Petroleum.